Greetings, members one and all of the Salivation Nation. On this Thanksgiving Eve, gold and silver they've taken a hit the last couple of days, but there is still one organization that thinks that gold's going to hit $2,500 an ounce next year. Let's explore! Yes, indeed. We see here the markets on this Thanksgiving Eve. Gold is actually down a couple of dollars. Silver's up only a nickel here. Still, both those metals have been hit pretty hard based off of some recent news that is hit in terms of vaccines, transitions, and the like. A lot of things going on here. But there's two ETF analysts, according to the CNBC articles, that break down Citigroup's bullish call of $2,500 gold for 2021. They, in recent weeks, came out with a $2,500 price target on the yellow metal for 2021, comparing its mosaic of catalyst to that of gold's 1970 to 1980 bull market. Those catalysts are very much in place, Granite Shares founder and CEO Will Ryan told CNBC's ETF Edge on Monday. The stimulus would be probably the most obvious one, the one that's certainly driven gold prices for the majority of this year in 2020. And also, I would say uncertainty around the economy in general because of the coronavirus. On top of that, the weaker dollar, rising inflation expectations, falling real yields, and ongoing market volatility should all continue to boost prices, said Rind, whose firm runs the Granite Shares Gold Trust Bar. These conditions that drove gold to an all-time high this year are very much still in place. I think it's just natural that once you get to an all-time high in an asset class, there's some consolidation afterwards, and that's what we're seeing right now in terms of the price, he said. But the fundamental conditions are still here, and I believe they will still be here for the next 12 to 15 months minimum as well. ETF Trends David Nadig, which was not a big gold bug, by his own proclamation, flagged several more bullish catalysts. I'm the first one to point out that gold is a non-producing asset. It's a psychological commodity, meaning it's only worth what someone else is willing to pay for it. Isn't that pretty much the way everything with all the markets are? With any commodity, Nadig, Chief Investment Officer and Director of Research at ETF Trends and ETF Database, said in the same ETF Edge interview. That being said, it's hard to argue with thousands of years of history. Boom! He nails it there. Of folks looking to gold as a store of value in times of crisis. Now, I don't know what we're in if it's not a time of crisis, he said. There you go. I think that pretty much nails it down. That should have made him a gold bug, I feel. Beyond the macroeconomic drivers Ryan listed, there's a push and pull at play on the more micro side of gold story, Nadig said. Remember, the gold mining industry is an industry like any others, and it has been hit by COVID just like every other industry, all the way from the mine to distribution to manufacturing. All of that's been constrained, he said. So the supply remains very constrained, and at the same time, demand has really never been higher. Investment demand, particularly ETF investment demand for gold, is at all-time highs. And for the physical, well, forget about it. The premiums are still pretty high. Indeed. Gold's resurgence will likely only add to the sentiment, the ETF analyst predicted. Whether it's just investors realizing a 5% allocation to gold is a nice way to provide some counter-correlation in the portfolio, or whether it's folks just speculating that the price is going up over the next 6 months, that demand is going to be there, he said. So you've got these big macro drivers, and at the same time, the fundamental microeconomic structure of the gold market is bullish as well. And gold prices moved higher Wednesday to around $1,815, but they did fall back some as well. In fact, we can see here that the prices have dipped down here, and gold is now below where it was to close yesterday, $2.70, 1807.30 there. And this from FX Empire, gold price forecast, gold market sitting on major support. I think this definitely does hold ring true, as that $1,800 level is a psychological barrier that we are sitting here where the prices have moved to that level. It's an area that's a large, round, psychologically significant figure, but it's also where we see the previous breakout. That being said, the market is likely to look at this as potential support. Furthermore, it also features the 200-day EMA, which, of course, is a longer-term support indicator that a lot of people pay attention to, defines the trend for a lot of traders. So value hunters are certainly going to come into the picture now. And what the dollar index does, it starts off the sell-off, then it may help gold going forward. And it's believed that it's only a matter of time before the liquidity measures taken by central banks around the world will continue to push gold higher. And that is something we need to keep in mind. And so this is the things that we're looking for, the trend line, not only in the technical aspect, but just in what's coming forward, with the dollar index and where things go, the liquidity measures. And with those things, one thing is for sure, there's two things that will continue to make gold not go down too much, because we will see certainly some consolidation, and especially after this vaccine comes into play and being distributed, and the markets get comfortable with that, and whatever political situation we may have in the next year, whatever they're comfortable with, even though it may not be a good thing, markets may react to that. We may see the prices go down. But there's always a looming two things, and that is deficit spending and debt. Those things will drive up, and the money supply will increase. There's the trifecta of things that are going to be drivers for bullish gold. And I believe that gold at $2,500 next year in time, I don't think is out of the realm of possibility. And that's with seeing now gold flirting with the high 1700s as we look through here. But I am bullish. We'll see what happens. I could be wrong. I've been wrong before. And where gold goes, silver will go as well. We're seeing kind of an unusual thing here where silver price is actually up while gold price is actually down. It doesn't happen very often. I've talked about that in a previous video as well. This could be another one of those slight anomalies, even though silver has taken a pretty big hit lately here. So, yes, indeed. So, in fact, the hit can be measured by the gold to silver ratio, which is now 77.36. So, there you have it. So, post your thoughts in the comment section below. I want to wish you all a very happy Thanksgiving day ahead. And we'll have a video coming out tomorrow, as usually do for the holidays. But a multitude of gratitude to you all. And I want to encourage you to please rate, share, comment, hit the notification bell, and subscribe.